Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are going to talk about flag patterns and whether you like to fly an American flag or a Canadian flag or a European flag or whatever kind of flag that you like to fly. Today we are going to talk about bull flags and bear flags. So it's officially Flag Day today. If you are not following me in the land of X, formerly known as Twitter, consider this your invitation. My handle is Barb Armstrong CS. We also have the privilege of having Ben Watson with us in the chat. Ben is a friend and a fellow coach. He posts some great content on X. You'll want to follow him as well, Ben Watson CS. And along with Ben, he brought 80 to 100 friends with him, and more people are joining as we go. And I love that you guys help bring this class to life by being so participatory in the chat. This is an introductory level class. So every week we're going to talk about a different topic within the realm of technical analysis. We will place an example trade, but really the purpose of this class is to just introduce these concepts so that when you look at a chart going forward, you have a better idea of what you're looking at and how to interpret it. Okay, so if you're new to this whole world of investing, you are in exactly the right place. And if you talk to someone maybe at an in-person event or something like that, and you say, where would be a good place for me to start? This Getting Started with Stock Investing class that Kevin Horner teaches on Thursdays, and this Getting Started with Technical Analysis might be a couple of the webcasts that you might consider adding to your roster. So I'd just like to start by saying hello. So hello to John, the Noble Savage, and William, and Bob, and Marcus, and Jay, and Riceberg, and the rest of the usual suspects, Susie Q and Sharon and the rest of the gang. Thank you all for being here. We've got Donna with us today too. I had the privilege of meeting Donna in Chicago, and that's one of the great things about going to a live event. So this weekend they will be where are you this weekend, Ben? Is it Dallas? I think they're in Dallas this weekend. So, if you show up, if you haven't registered, they will not turn you away, but these things fill up fast. So look at the roster. I'll bring it up later in the class and you'll want to check that out. Okay, so know that everything that we're going to talk about today is for general information purposes only, none of it to be construed as a recommendation. We are going to look at an options trade today, and know that options carry a high level of risk and aren't suitable for all investors. You also have to apply for option trading privileges, and not all will qualify. The paper money software application on the Thinkorswim desktop platform is the platform we are using, and it is a brilliant place to learn and hone your skills. Make sure you understand both how to place a trade and the trading plans, with which you are trading. So, we have done a little bit of a redesign this year on the Getting Started with Technical Analysis. Today we are on week 5, and we're going to talk about all things flags. Last week we talked about candlesticks. If you missed it, I will put a link in to this playlist, and you can go back and watch that. I also reposted yesterday kind of a cheat sheet or a summary page for some of the common flag patterns, candlestick patterns. So you may want to go to X and check that out as well. And so today, and our focus is going to be on flag patterns. We're going to talk about what a flag pattern is and how it's created. And then we're going to, go out and spend some time on the charts looking at examples and then place an example trade. So, price patterns are constructed in different ways. And today we are talking about flag patterns, but they can be formed over any given time frame. They aren't limited to a weekly chart or a monthly chart. You can be looking at charts where each candle represents a minute or 5 minutes. You can be looking at a candle that represents a day or a week or a month, and we can see these types of patterns in all time frames. Okay, and each price pattern is formed over a period of time and will give a trader potential signals. And you know, sometimes they follow through and sometimes they don't. They also can give us a guideline. Let me just bring up my drawing tool on how to establish a target. And we're going to talk about different targets within the world of flag patterns. You know, and they can provide entry signals, and sometimes they can provide exit signals as well. Okay. So here we're talking about entry and exit signals. And with flag patterns, because a flag is created, and we're going to go to a more sophisticated chart. This is, you know, a bull flag. So here is the flag pole. And then here's the flag bit, right? And this is a trend continuation pattern. So we're looking for this to pull back and then continue to go to the upside. And a swing target would be if you said, here's my goal, is to get out when it gets back up to the previous high. And then some might say, well, my target is going to be the length of the pole. So if this pole is $10 long, then I'm looking, and some will measure it from the top and some from the bottom. That's a, you know, a personal choice. They might say, well, I'm looking for it to go up this $10. And so this isn't going to be my target here at 50, maybe. I'm just pulling that number out of a hat. Maybe my target is going to be 55. And, you know, the swing target might be seen as being a little more conservative, and, you know, the flag pole target, you know, a little more bullish in this case. And then, you know, we can flip it and reverse it. And we're going to look at a bunch of flip it and reverse it, you know, on the bear flag side of things too, where again, you've got your flag pole, and then we've got the flag part. And then what we're looking for is this to continue to go to the down side. And things don't tend to fall straight down. You know, they fall and then they rally a bit and then they fall again. And you know, how do we use this when we see it? Okay. Okay. So let's look at, you know, and this is a continuation pattern. So we're looking for something, if it's uptrending, that even though it's pulled back for a few days, that this might, you know, continue to uptrend. So that this is a temporary, the flag part is this temporary pullback within the context of a continuing uptrend. Okay. And in the shorter term, you know, this can take, you know, days to weeks to form. You know, in this case here, we're looking at something that took maybe 2 weeks and then pulled back for a week and then continued on to the upside. Okay, so this initial move we call the flag pull. And we can have, you know, it pull back, or sometimes we'll have it come up. And Ben used to teach a class called Trading Flag Patterns, and sometimes it'll go straight out. We call that a bull flag and a stiff wind, right? I don't know if that's an official name. You know, sometimes we just make things up, but it makes it easier to remember. And what we're looking for as a break, you know, on a bull flag is this close above. You'll hear some people call this a Cahold pattern, but a close above a high of the low day. Okay, so in this case, did it close above the high of the low day here? Maybe. You know, for sure this day. So, you know, some might have said, well, here's my entry is on this day. And then my target, if this is, just to use a number, $10 wide. And some, again, might measure from here, and some might measure from here. And again, that's personal preference to say, when it goes up 10, I'm going to put my target there. And when it gets there, I'm going to get out. Okay. And so our entry, when it breaks this resistance, and how do you define breaking that resistance? Well, the way some might define it is this way. You know, that's not to say that that's the only show in town or the only way you can do it, but that is one example of a trading plan entry signal. And the target could be the length of the pole, or it could be this swing target, the previous high. Okay. Okay. Any questions on that? Alrighty. You guys, I know for many of you that are in this might be a review. For some of you, this could be all brand new and it's a bit like drinking out of a fire hose. And either way, you know, school is never out for the pro. I'm in the chat in several webcasts a week and I'm continuing to learn. And I started on this journey back in 2011. Now we're seeing a lot of, this kind of stuff today, aren't we? Potential bear flag pattern setting up. Okay. Just let me get my drawing tool here. So, and this is bearish, which means we're expecting this thing to fall. And in this example, we saw something fall. You know, and every once in a while, there was a bullish day in here. We saw a green candle, green candle, green candle, but it was like a one-day, one-hit wonder, and then it continued to fall. And then we had like 5 up days in a row, and then it hit this top. But what characterizes this is that we see a series of, here's a high, and here's a lower high, and then a lower high, and then a lower high. And then again, on the low side, we're seeing a low and a lower low and a lower low. You know, and that's part of how we defined a downtrend, is that we're seeing this series of lower highs and lower lows. And within that, we're seeing these bear flags. So falls again, tries to rally for a few days, falls again, tries to rally, falls again, and we left it trying to rally. And how do we define break of support? Well, some might call that that we're looking for a close below the low of the high day. So when we look at this high day and we get something that closes below the low of that high day, we might say, okay, now we're rocking and rolling. And again, these flags can appear in all time frames. They can appear in all time frames. Okay, and again, we have our flag pole and then our flag. Okay. Okay. And our target is, it can be the same thing. It can be a swing target. Say, hey, I'm going to get in here, and when it reaches here, I'm going to exit. That would be a swing target, the previous low. Or we could do a flagpole target. You know, you could do either one. Okay, so let's go out and look at some charts, because for me, this was where the magic always kind of happened, right? Okay, so let me bring up Thinkorswim. And I do not typically talk about the overall market in this class. But today we've had a pretty bearish day. So here's the S&P 500, you know, it was way down earlier. But, you know, when we look at, we had an all-time high for this market, you know, back on February 19th. So just, you know, a couple of weeks ago. And at one point today, it was down almost 7%. And so, you know, it's not that we're seeing, you know, saying that the market is now in a downtrend, but we definitely, you know, it seems to be coming into a range. And at one point we were down almost 10% on the NASDAQ, which would put that index into correction territory. And, you know, now it's actually up on the day, but we're seeing it kind of in this range that it's been in now since what, the beginning of December. Okay. And so why do we care about that? Well, we might look at which sectors are really thriving and which sectors are kind of on the struggle bus if we're looking for specific trade entries. But what I want to look at today, because, the purpose of this class is really to be able to identify and develop this skill set so that we understand what's going on when we see it. And, last week we talked about candlesticks, and I said I'm starting to create this series of very short videos, kind of one candlestick pattern at a time. I recorded some on Friday, and so we'll start seeing those in the next, couple of weeks. But what we're seeing when we look at PepsiCo here, or Pepsi, is that we had a stock that was falling. Oh, let me change the color. We had a stock that was falling. So there's the flagpole, and then it rallied for a couple of days. And then on this day here, we had what? A close below the low of the high day. And if we had put a target in, and I'm just eyeballing this, we can kind of measure it, but we were looking for it to fall this kind of distance. And I would say even just looking at this, it kind of fell for 2 days and then went sideways, but it eventually came back down. So then we saw another flag, and then it rallied for a few days, and it fell, and it rallied, and it fell. Then it kind of like, here's our bear flag with a stiff wind, where it fell and then went sideways. And if we look at this, here's our flag pole, and then it fell again. Now, so when we look at this, this is a continuing downtrend, right? Well, when does the trend change? Because they say the trend is your friend until it ends. Well, we consider this to be a continuing downtrend as long as we have that series of lower lows and lower highs. And when did that change here? Well, when this candle happened, this was no longer a lower high. Now, all of a sudden, this is a higher high, saying, hey, just a minute, this downtrend may be drawing to a close. Okay, so we had our lower low here, and then it came back down. So you could look at this as another flag. But did it come down to a lower low? No, it came down to a similar low. And then, kind of went sideways for a bit, and then it came back up again here to technically a higher high, but you could say a similar high. And then some might look at this today, and this candle has changed. It was a big, white candle at one point. In fact, I posted something, on Twitter to say, hey, if I'm playing I Spy with my little eye, I'm looking at a double bottom with a breakout, potentially. And so we're seeing, we can see lots of different patterns within the context. Yeah, Blaze, you got it, a double bottom. Right. And so let's look at another one. So I'll just shake my little trading Etch-a-Sketch there. So let's look at CMG. So with CMG, and this is just a 6-month chart, but like, oh, how the times can change, right? Because when we go back 6 months and we were looking at this, we had something that was uptrending, and then here's our kind of elongated type flag. And then it took off again. And then, and it's interesting because here you're saying, ooh, maybe this uptrend isn't continuing because this was a lower low than the previous low. But then we had this earnings event, and then it started to take off. So bull flag hit a new high, pulled back, new high, pulled back, new high. And then what happened? Well, then we came down and we had 1 day of rally, which may have incented some people to place their next bullish trade, even though we didn't have a high above, a close below the high of the low day. close, sorry. I can speak freely, a close above the high of the low day. So we didn't actually get that when it hit this high, did it? Because then it started to fall and it came down below this low and, you know, it came all the way, almost all the way back down to this low. And so it's like, oh, is the tide changing? So you might say, okay, well, it came down here and then rallied for a few days. And now instead of having this series of bull flags, it's now looking like this could be a bear flag. And in fact, it did turn out to be a bear flag. And then it fell, rallied for 2 days, fell again. And then we had this kind of period of consolidation where it's like, okay, well, now we're seeing similar high, similar high. These are not flags in here at all. This is just a period of consolidation where a stock is kind of range bound. And then it came up and created a new flag. And today it's fallen. And so if we look at this, could we look at this and say, hey, I think this could fall back down to that $50 level. It's currently trading at 53.11. You know, what if this downtrend continued? You know, and, you know, could we buy a put to take advantage of this pullback? And so, and what might the target be? Well, if we look at this, we have two choices, right? So we can, just let me close this. So we can come from the top of our flag to the bottom. And how far is that? About $7.69. Let me just write that down. $7.69. And so we could say, well, here is the top of our next flag, if we want to measure it that way, at 55.70. And if I subtract this 769, the target would be 48.01. So that's below this previous low. So this could be a flag target. So I've just drawn a line and then I'm going to make it this 48.01. Now, the other thing we could do is say, you know what, I'm just going to go with a swing target and I'm going to put my target up here around that $51 level, not quite at the very low. So I'm going to make my target this, you know, we could call it 51 and call that our swing target. Because, you know, support and resistance, I mean, these things are ranges, right? And the expectation here is that this stock has formed a bear flag pattern. And today, do we have a close or is it trading? Because this is still a live candle, but is it trading, you know, such that it would appear that we will have a close below the low of the high day? Right. So how would we put that trade in? Well, we can come to our trade tab and let's say we're going to come out to April just to give it some time. Does this trade more than 1 million shares a day? It does. When we look at the put side, do we have lots of contracts already on the books? Yes. Do we have a tight bid-ask spread? Well, it's 10 cents, so one might argue yes. So if we were to buy a put, we would come in here and click buy, and we want to buy custom with an OCO bracket. And if we go for the more conservative, we just want to see our swing, it hit our swing target. We're going to, it's not going to be based on the price of the option. It's going to be based on the price of the stock. So we're going to click on that little sprocket, which brings up a conditional order box, and say, we would like to sell the put that we have bought if and when this stock gets to, what was our target again? Was it 78? Dang it. Come back. 48.01 was the first one, 51 if we did our swing target. So we're going to come out here, sprocket. If it goes at or below $51, we would like to take the money and run. And then what do we want to put for an exit? Well, we could say, you know, we could put a price on it, but we could just say, this is a stop market order. If we lose half of the amount of the value of this option, so that would be what, about $1.65. If it gets to the point where it's worth about $1.65, it's lost half its value. And so we would like to just cut our losses and exit the position. Okay. So when we come to confirm and send, now when we're buying a put, how much could we lose? We could lose the entire amount, because if the stock goes up, you know, this gives us, when we buy a put, it gives us the right to sell the stock at the strike we paid. So if it goes down to $51, we have the right to sell it at 55. And so one would assume that this option would be worth at least $4. So, and how much can we make? Well, it's saying our max profit would be if the stock went to zero. So that would be $5,000. You know, and how much are we risking? We're risking 330. Now, what's the probability of this stock going to zero by April 17th? Not high. But we're looking for a base hit here. Okay. So we're going to put this in our long put group. And this is a swing target based on a flag pattern. Okay. Fire in the hole. Okay, now let's go ahead and look at another chart. Let's look at a couple of bullish charts just to kind of be an equal opportunity viewer here. So let's look at EXE. So Exelon, if you're not familiar with this company, it is in the utility space, and utilities are all of a sudden looking really attractive as we've seen more market volatility. Some traders want to go to a place where they can sleep at night a little better, where there's lower volatility, and perhaps also something that pays a dividend, maybe something more value oriented. John is asking, will this technical analysis technique work the same on an index or an ETF or even a futures contract? Yes. Yeah. So a chart is a chart is a chart. Okay, so let's look at EXE. So, kind of went up, and then pulled back. So there's our first flag, and then came up again, pulled back, came up again. So this one was very short, and then pulled back for 2 days. And then, man, oh man, this thing took off. Pulled back for 3 days. And often, how many days, does it pull back for this flag to be created? Sometimes 2 to 5. And then sometimes you just get a 1 day pullback. And then it's pulled off again, taken off again. And is this a sign that it may pull back for a couple of days? It sure could be. In fact, the candlestick pattern here that we're looking at is called a bearish engulfing pattern. But you don't want to look at either a flag or a single candle or a single candle pattern just in isolation. We kind of want to look at it in the context of the whole trend. But we're seeing here a stock that's been going up, quite aggressively. And today we have this is called a bearish engulfing pattern, and it's at a potential resistance level. And so, might we expect that even if this uptrend continues, and remember, I'm saying even if, that it might pull back for 2 or 3 days before it continues to go back to the upside. And then if it does pull back, what would we be looking for, or what might some traders have as part of their plan? They might be saying, I'm looking for that once it pulls back, that close above the high of the low day as my entry. And then I might measure this distance to give me a potential target. So, but today what we're seeing is just perhaps the beginning of the flag portion of the creation. Okay. Okay, let's look at another one. How about Kraft Heinz? And again, here's something. This isn't a utility stock. This is a stock that's considered to be in the consumer staples. Like, you may want to cut discretionary spending, but if you need ketchup or you need mustard, you're probably still going to buy it. And again, this is one of those stocks where we're looking at a series, we're seeing a trend, a change in trend direction where we had a bear flag. So because this was a low and this was a lower low, but then it kind of came back around and paused and then continued. And then we saw another lower low. And then we saw this kind of period of consolidation. And now we're seeing, this bull flag pattern. And then today it might be pulling back, or this might be just a one-day pause, given all the tariff talk and, what's going on globally. We have to, be aware of what's happening outside of looking at the chart as well. Okay. Okay, let's look at another one. Let's go back to the dark side, because there's a lot of dark in the markets today. And it may have changed a bit, but if we come to Market Watch and we look at the S&P 500, and at one point it was looking a lot worse, but this is saying that 70% of stocks in this index are down today. So 354 of the 500. If we look at the NASDAQ, actually it's changed quite a bit. It's kind of, now we're about 50-50, 49 to 52. But let's come and look at another chart. So when we look at Caterpillar, we saw this stock that it looked like this might have been a bull flag setting up. And in fact, some traders might have even, considered placing a bullish trade here, because at one point it did go above the high of the low day. And so sometimes these trades, like, you may have thought it was a breakout, turned out to be a fake out, because then what happened? It fell, rallied for a day, or, we could say rallied for a couple of days, and then it's been falling. And then kind of consolidated for a couple of days, and then fell again. And the reason actually for this little green circle on the chart was, it was something I was going to use as an example in doing the short video of, you can have a bullish candle within a downtrend. And, CAT is at this moment downtrending. And, the point I was making, when I first recorded this, was this could be a sign, this hammer pattern, that if it's bouncing off a support level, you know, within an uptrend, it could be a sign that this support level is holding, but within a downtrend, it could be a sign that this is just the beginning of a flag, which is actually what it turned out to be. Okay, how about we look at CRM? And again, you know, we had, you know, something that had hit similar highs, you know, here and here, but then it and hit similar lows a couple of times. So we need to look at support and resistance. But when we look at this recent trend, we saw it come down, rally. So here we have our flagpole and then the body of our flag. And then we had that close below the low of, we had the close below the low of the high day. And then it rallied for a couple of days and then it fell. And then it rallied for all of one day. And then we had this bearish engulfing pattern where the body of this candle totally engulfed this candle. And then today it's down again. And so could today, you know, because this day yesterday, we had this bearish engulfing, but it's kind of iffy if it didn't close below the low of the high day. So some might say that today could be a potential entry if you wanted to do another example trade. And then could we do a swing trade on this? Well, we can't, because it doesn't have anything to swing down to. And so here you might just measure the length and say, well, you know, whatever this distance is, I'm going to put my target kind of an equal distance down there. And so swing trades aren't always possible because by the time we got this entry, we were already below what the swing target might have been. Okay. Okay, so have we got any questions on that? Okay, so would you like to do another example? Okay, so let's use this as an example. And so let me just clear this because we're going to have to do a little measuring. So if we come up here, we say now this also broke below the support level because we need to be careful about that also, right? So we could say this length was about $28 on CRM, the length of that flag. And then the next one was about $21. And so if we look at here and we go to $28, it would put our target around 275-ish. And right now it's at 289. And so if we wanted to do another trade, expecting that this might continue to fall further, given we have this bear flag, we have a close below the low of the high day, or at least today it's trading below the low of the high day. And we have a target and it's broken below this previous support level. So if we came to the trade tab and we came out to April, now depending on your account size, like if we do this 280 strike, we're risking about $800. And how much could we lose? We could lose all of it. But again, if we look at this and we say, well, does it trade 1 million shares a day or more? Check. Do we have lots of volume on the option contracts? Check. And then we're just going to do one for our example. But, you know, we've got 1,100 contracts. We have a bid-ask spread of 30 cents. We want it to be less than 10%. The smaller, the better. Okay, so, you know, it could be 80. It's 30, so we're good there. So we're looking to buy. And we are actually going to, we want to buy with an OCO bracket once again. So we're going to put in this Same stop at $4.20, which is half the value. We're going to make it a market order. We're going to make both of these good till canceled. And we're going to come in, say, hey, if and or when this goes below, oh, and I didn't write down that number again. Dang it. I have a good memory, but it's short. So this was around 275. Okay, so we're going to make that 275 our target. So when or if it goes below 275, we'd like to take whatever gains are showing and exit the position. Okay, so confirm and send. Now, we want to exit this if we've lost 50%, but if this were to gap up, could we lose more? Yes. How much could we lose? Up to $840. Okay, and so we're going to put this in our long put category. So there's no guarantee we're going to get out when we're at the price we're asking. You know, and there isn't a guarantee we're going to get out at exactly 275 either. If it gapped down, we could get out at a lower price. Now, in that would actually work to our advantage in this example. And this is a flag target. Okay. Okay, so we've done 2 example trades, and we've looked at a number of examples of both bull flags and bear flags. We've talked about how we can use bull flags and bear flags to determine entries and exits. If you want more on this, you are welcome to go to, and you're going to want to hit the subscribe button on this, because when you hit subscribe in the bottom right corner, if you haven't already subscribed to the channel, when you first get to Trader Talks from Schwab Coaching on YouTube, you'll see that whatever class is, you know, and I need to refresh this, is currently being taught, you know, getting started with technical analysis. But if you come to playlists and scroll down, you'll find the getting started with technical analysis. And currently it's close to the bottom. Here's getting started with, here we are, getting started with technical analysis. And you can view the full playlist. So you can do some binge learning, right, if you're interested. The other one that I wanted to point out is that I did a series of trading plans, and I'm going to continue adding to them. And I'm going to add some bearish strategies over the next couple of weeks. So all these ones in blue are example trading plans. And then if you're new to Thinkorswim, there's a whole bunch at the very bottom that are just like how to customize a watch list or your monitor tab, all that kind of great stuff. But you'll see there's a long call with a 1 ATR target. You'll see coming to a playlist near you, the long put version coming up soon. Okay, so as we wrap, here's my ask. I've already asked you to hit the subscribe button. There's also a survey today. And so here's the deal with the survey. 2 questions. 1, I hated it. 10, I loved it, and everything in between. And then you have the ability to put comments in. So that if there are some topics you'd like me to cover in upcoming classes, I promise if you fill it out, that both myself and the management team will read each and every comment. So if you do the survey, that would be great. And follow Ben and I on X, Ben Watson CS, Barb Armstrong CS for Charles Schwab. I think that you'll be delighted with the additional content you find there. And last but not least, hit that like button. What it does is it moves this up in the algorithm so more people can find this content. It also lets Ben and I know that you found this to be a valuable class, which we very much appreciated. And it's also a chance for you to do a favor for a random stranger who might not be able to find this content otherwise. So on that note, I say thank you for joining us. Stay tuned for what's up next, and we'll see you in a webcast coming up soon. Take care, everyone. Bye for now.